The U.S. stock market has been on fire, and almost all of that heat comes from one source: artificial intelligence. For nearly 2 years, AI has been the driving force behind Wall Street's massive gains. But now, investors and economists are asking a tough question: is this AI-fueled rally turning into a bubble? And if it is, what happens when it pops? Let's break it down. In 2023 and 2024, AI transformed from a niche story into the backbone of the market. Companies like NVIDIA, Microsoft, Meta, and Amazon became the new Magnificent Seven, pushing indexes like the S&P 500 and NASDAQ to record highs. NVIDIA alone went from a $300 billion company to a multi-trillion-dollar titan, fueled by a single narrative: AI will change everything. And for a while, that narrative made sense. AI was, and still is, a genuine breakthrough. It's transforming industries from healthcare to finance to retail. But markets have a habit of turning good ideas into dangerous manias. Today, AI-related stocks make up more than 35% of the entire S&P 500's market cap. That means a handful of companies are now holding up the entire U.S. stock market. Even small tremors in AI sentiment could ripple across the entire economy. And here's where it gets risky. According to a recent report from the International Monetary Fund, global markets are showing signs of complacency. The IMF warned that investors are assuming AI profits will grow forever, even though earnings haven't caught up to expectations. Some analysts are calling this the most top-heavy market since the dot-com bubble. Let's put that in perspective. During the 2000 dot-com boom, investors also believed a new technology would change everything. The internet did transform the world, but that didn't stop tech stocks from collapsing by 80%. Great technology doesn't always mean great timing. The question today is whether AI is following the same path. Take NVIDIA. Its revenue from data center chips has exploded, but demand growth is starting to slow. Tech giants like Amazon, Microsoft, and Google are now developing their own custom AI chips to cut dependency on NVIDIA. That could dent its future profits. Meanwhile, smaller AI firms are burning through cash to chase market share, with few showing sustainable profits. And it's not just the chip makers. Cloud spending is skyrocketing, but returns are starting to flatten. Companies are pouring billions into AI infrastructure, data centers, GPUs, electricity, but many of those investments may take years to pay off. The risk is that Wall Street is pricing in perfection long before it arrives. Another warning sign: concentration. The average U.S. investor today has more exposure to just 5 companies than ever before in history. When the top of the market becomes too crowded, even small disappointments can cause big drops. If NVIDIA, Microsoft, or Apple misses earnings or guides lower, it could send shockwaves through the entire market. Now, some argue this isn't a bubble. It's a productivity revolution. They point out that AI is already boosting corporate efficiency, cutting costs, and improving output. Goldman Sachs even estimates AI could lift global GDP by 7% over the next decade. That's huge. But there's a difference between long-term promise and short-term speculation. Right now, stock valuations are pricing in a best-case scenario. If AI adoption slows, regulation tightens, or profits fail to meet sky-high forecasts, investors could start rushing for the exits. Fast. We're already seeing the first hints of that fear. Volatility indexes like the VIX have ticked higher. Bond yields are rising again, putting pressure on growth stocks. And hedge funds are quietly reducing exposure to big tech, shifting into defensive sectors like energy, healthcare, and consumer staples. Still, bubbles are tricky. They can inflate much longer than logic suggests. The AI boom could easily continue for another year or two, especially with corporate America still racing to adopt AI tools. The difference this time is that AI isn't just hype, it's infrastructure. Unlike many dot-com companies that had no profits or products, AI firms are generating real revenue and powering real innovation. But here's the twist. Every major innovation cycle in history, from railroads to radio to the internet, has included a speculative bubble. Bubbles aren't just about greed, they're part of how economies overinvest in new technology before settling into sustainable growth. The dot-com bubble burst, but it paved the way for the modern internet economy. So what happens if the